There's two ways to buy real estate. You can borrow money or you can pay cash.
Yeah.
And the vast majority of folks borrow money. And today we're going to talk to one of the top mortgage lenders in the country about things. And let's dive in.
I'm Danny Tokar with Benchmark Mortgage. I'm the local branch manager here, Plantation, Florida.
And I'm Lee Rosa, real estate coach, 20-year real estate vet, well over 2,000 closings under our belt. And Danny and I have been working together for over 13 years. And so excited to break down some of these topics with you.
Me too.
And the first one is about what is a good deal. And it's one of my favorite lines to use with a person looking to borrow money or who's looking to buy real estate and asking them, what does a good deal mean to you? Most folks who are looking to buy real estate have no idea what a good deal means. They'll say what a good deal is in their mind, and here's what a good deal means to those who choose to work with me. It's the least out of pocket and the lowest monthly payment. And out of pocket would be down payment, closing costs, inspections, appraisals, repairs, moving costs. That's out of pocket. And then monthly payment, the lowest monthly payment would be, well, interest rate, along with taxes and insurance and all those other variables, which today let's focus on the borrowing of money, which there's two ways that a lender is compensated, on the front end and on the back end. Front end, you see it. It's origination points, it's fees, it's things that every bank charges. And on the back end, it's the interest rate. If a lender was to say, hey, I have no fees, no fee mortgage, they just wrap it into the interest rate. And so lenders are compensated either on the front end, back end, and sometimes both. Not all lenders are created equal. Not all banks are equal. And there's a level of experience that may cost a little bit more than others, but it doesn't necessarily have to. And so let's kind of break down, Danny, what is important about the process. That when a borrower is shopping, speaking to multiple lenders, why shopping is good, and also how and what they should look for when shopping.
So the first thing that I want to do is I want to go back to what you were talking about initially and what is a good deal. So a good deal is what is good for you, what's important. Not only monthly payment, not only cash out of pocket, but what are your goals? How long are you going to be in the home for? What type of home are you looking for? What are some of the things that are important to you in this purchase beyond the mortgage? All those things go into us putting together what a good deal might be for you. Now, with that said, there's all sorts of different loan programs, there's all sorts of different products, there's different ways that we can structure your loan. So sometimes we may be able to structure someone's loan with a lower interest rate that has a higher payment, and vice versa. It's not only about payment, it's not only about cost, it's truly about holistically understanding what you are looking for as a borrower and making sure that we can accomplish that for you to get into your home.
Okay, and so not all lenders do this. Some just throw numbers around.
Yeah.
And so when a borrower is speaking to, let's say, 2 or 3 different mortgage brokers or banks, what should the borrower do or collect so that they can compare apples to apples?
The first thing they want to do is make sure they're working with a lender that has their best interest in mind. Regardless of who they ultimately choose, that is a non-negotiable. When looking at different lenders, you want to collect information like what type of loan products am I being offered, what's the cost of those loan products, how much money is it going to cost me out of pocket, how much money am I paying in fees, and a few other variables.
So what is this document called that they can collect from whoever it is that they're speaking to?
So anytime we're speaking to you, up front we're going to collect your information and then we're going to provide you with a loan estimate that goes over all the different terms that we can offer you.
Okay, so a loan estimate, sometimes known as a fee sheet,
Yep.
is something each borrower, you, should collect or have your clients collect and then bring it to the agent so that they can communicate with the client and then communicate with the loan officers to help the buyer navigate.
Yeah, and the reality is that you want to make sure, like I said, by choosing a trusted lender, they're not only going to just run your credit, hand you a pre-approval letter, and tell you to go shop. There's so many things that go into this process. We're gonna review your credit, your income, your assets. We're gonna make sure that the numbers that we give you align with the products that you're approved for. And we're also gonna make sure that we're giving you realistic figures. That's the biggest thing that I can tell you. When I see competitors' estimates come across my desk, there's 2 items on there that 9 out of 10 times are wrong, and that's your taxes and insurance. I wanna harp on this for a second because that is the biggest thing that I see when you're comparing apples to apples. Sometimes we may seem more expensive or may seem less expensive based on information that has nothing to do with us as a lender. Anytime we have a property, we're always gonna go to the county property tax website. We're gonna pull a county property tax estimator, not to know what your taxes are right now, but what they're gonna go to. That's super important because guess what? Your monthly payment on the day of closing is gonna change if we don't use the proper tax estimator.
So big. And so whenever an agent is working with a home buyer, it is vitally important that you look at what the loan officer has estimated as the taxes and insurance, not what that payment number looks like, because 9 out of 10 times, or more than not, it's an exaggerated low number to make it look sexy.
100%. And when someone's looking for the best deal and it's the first time they're ever buying, if they haven't gone through the process the right way, or if they're not working with an experienced agent that's helping guide them through the process, they're just gonna go with the best deal.
Well, they're gonna go with the lowest number.
They're gonna go with the best deal.
Yeah.
Right? And you know, I'm very passionate about this topic. Over the years, I have lost some business to providing people with accurate numbers. And those are the same clients that have called me back to refinance when their escrow analysis has happened and now all of a sudden they can't afford their new payments. So when I'm doing my analysis up front, I'm gonna give you that payment up front, even if it means that you don't buy that house. Because the reality is I need to make sure that not only can you afford that house on the day that you close, but you can afford it in the future as well.
So for an agent watching this, it is vitally important that you go through the document with your buyers so that you can help them self-discover that the lender may or may not have looked at the proposed taxes at the purchase price and that the insurance is realistic, because that's what being a fiduciary is as an agent, and you behave as a fiduciary in lending money. And it's possible that a lender that is not familiar with your county or your municipality, that there's certain aspects that may not be disclosed up front, but it'll show up later.
Yeah, and the reality is we see this a lot with out-of-state lenders, non-local lenders. They don't understand the local insurance market. They don't understand the local tax market. All they're doing is using the guidelines which state you can't use less than the last tax bill. So they're using the last tax bill. But the reality is that when we come down to it and crunch the numbers, that information is available for us. So working with a lender that understands the market and understands how to navigate clearly through the market will help lead you in the right direction.
And so if you're looking to buy a house, or if you're a real estate agent with home buyers, setting up a meeting with Danny and his team would do multiple things. 1, it would provide another set of eyes on the same documents. 2, it could save them money not only up front, but on the back end. And it can save a transaction because 3 weeks down the line, the numbers could change, and that could change the way that a buyer feels about purchasing the house.
It could also change the qualification.
Wow.
The reality is that we're gonna go through upfront a holistic review of everybody's credit, income, assets. We're gonna invite the clients into our office. We're gonna invite you into our office. We're gonna sit down with you and go through what we call a pre-purchase consultation. That's gonna go through with you every loan program that you qualify for. What does it cost on paper, line by line, and what your monthly payment's gonna be. We're also gonna go through what can change and why and how. So that way, if you happen to buy something that may not be similar to what we're talking about, you are fully prepared for what's coming.
Because knowledge is power.